Welcome to NASDAQ Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ. Joining me is Dan Kessous, CEO of NASDAQ Canada, to discuss dark rule changes. Dan, it's great to have you with us. Welcome to Trade Talks.
Great to be here, Jill. Thank you for having me.
All right, Dan, tell us about the dark rules. What exactly are those?
So in 2012, the Canadian regulators introduced a dark rule framework. And what they did is change the rules when it relates to trading at the touch. So it's a kind of like a trade out rule, as it's known in the US. And what they did is put some restrictions so that you can only trade at the touch, at the bid or the offer, if you can provide price improvement, unless your order is large.
What happened in February of this year?
So in February, they tweaked that rule even further. Initially, the rule was saying that if your order is larger than 50 lots, which is in general 5,000 shares, or $100,000, then it could trade at the bid or the offer. Otherwise, it needs to be provided price improvement. And so that rule initially worked well. With one caveat is there has been an increase in trading at the bid and offer in low price securities, because it's easy to achieve the large size without a great notional value when the stocks are priced under $1. So they wanted to keep promoting price discovery, lit markets, and transparency. So they tweaked the rules so that not only you have to be 50 lots at the touch, but you also need to have a trading value of $30,000 in addition to the volume restriction. You can still do it at 100,000 alone, but if you're going to do it based on size, 50 lots or more, you also need to be valued at $30,000. So that's what happened in February.
Are there any consequences associated with this change?
Yeah, so the rules, had the effect that were intended, and I got to commend the regulators for looking at the data and really taking a data-based policy approach on that rule. So they've taken the approach in 2012, then they tweaked it again in February of this year, in looking at the data and seeing that there was still a lot trading at the NBBO on the dark pools. So when they made that tweak in February, it basically achieved what they wanted to achieve, and it moved a lot of that flow away from the dark pools at either price improvement within the dark pool or away from the dark pool to the lit markets, and not just any lit markets. It seemed that a lot of flow moved to the inverted marketplaces, and the main reason for that is it's typically because of the nature of the inverted market model, where the participant gets a rebate for removing liquidity. It's generally favored by the retail brokers in Canada. They don't route solely on pricing, but all things being equal, fees and pricing becomes a determining factor. And a lot of that flow has moved to the inverted venues, and particularly NASDAQ CX2.
All right, Dan, thanks for joining us on Trade Talks.
You're welcome. Thank you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.